Nvidia has earnings after the market closed on Wednesday, the 28th of May, and the world is watching. If you currently have a position in Nvidia, you're probably wondering, should I sell before earnings just in case it dumps? If you don't have a position on, you might be wondering if you should buy before earnings, hoping the stock skyrockets. Now, the big question is, can this massive tech company surprise the market with stellar earnings and exciting new developments? In this video, I'm not here to discuss the fundamentals of the company because that's purely down to one's opinion, but rather I focus on the technicals, price action, support and resistance, volume. These are the things that cannot be denied. So before you make any irrational decisions like investing your entire life savings into this one company, keep watching and you'll see that there are smarter ways to play this. Okay, let's jump straight into Nvidia's chart. Okay, so first things first, as you can see, Nvidia made its lows on the 7th April, which of course coincides with the rumors of Trump pausing tariffs for 90 days. And since then, it has been in an uptrend along with the overall market. Now, at this point, Nvidia is so big that it practically is the market. Anyway, the past couple of weeks, the stock has taken a bit of a breather and gone sideways. This is good because what we don't want to see is the stock rallying into earnings. If it does that, then it's more likely the stock will gap down or sell off come earnings day. But the biggest challenge Nvidia faces from a technical standpoint is it's got a lot of resistance to fight through. We have the most recent $144 area, which I've marked with a blue line. We have the 149.50 area marked with a purple line. And we have all-time highs at 153.13 marked with a green line. If and when price approaches these areas, then it will likely face some resistance. As you can see, these resistance levels are pretty close together, making that entire area dangerous territory for buyers. Not only that, but the longer-term moving averages, the 50 and 200 SMA, they haven't even turned up yet. Now, in a healthy stock and market environment, you'll see all the moving averages on top of one another, sloping upwards. So in my case, the 10, 20, 50 and 200 moving averages should be on top of one another. Obviously, you might use different moving averages, but the concept is still the same. They should be on top of each other. And Nvidia has only just come out of a big drop, so the stock price needs more time going up or sideways in order for the moving averages to catch up. So in an ideal scenario, Nvidia would have little to no resistance to fight through and in a healthy uptrend. We're not getting that scenario right now, so I would be very cautious about buying the stock right now. Now, if you bought at any time in April, that's great, you're in profit, but you may want to consider selling your position or at least trim down before earnings because a big gap down could easily wipe out your gains. If you have no position on, then I would personally avoid buying it just before earnings. Doing so would be a pure gamble and too risky. Sure, you could buy it and get lucky, but it's just bad practice to buy stocks before earnings. And the last option is buying Nvidia if it has good earnings. Best case scenario would be price gapping up or breaking out over all-time highs on massive volume. If it does this, it will no longer have any resistance to fight through, and as long as it can hold above it, as opposed to selling off, then I can see the stock shooting much higher for the medium to long term. Now, I don't know what's going to happen, nor do I want to predict what's going to happen. However, if I were to buy Nvidia, I'd wait for the stock to break above its resistance levels or at least build a longer base so that its overhead resistance is a distant memory. So regardless of what you think of Nvidia, whether you think it's got room for growth or whether you think it's had its day and the stock won't grow much more, don't let your bias blind you on the challenges the stock price is faced with. Be patient and manage your risk accordingly. Remember, you don't have to always buy at the lowest price to make money. What's more important is that you buy at the right time. Okay, so that's all for now. If you like this video, just give it a thumbs up and subscribe for more swing trading tips. See you in the next video.